In this video, we're going to look through the tariff war news, and there's a lot happening inside the markets. We'll go through some key statistics and some things that you really need to understand, how to position yourself going forward. There's also some fantastic statistics that I want to show you. I'll also share the positive, negative, and neutral price paths on selected rows from the service and help you to understand, is it time to mark up your charts or not? I'll also give you assistance into looking at how to read normalized positive and negative price paths, which is essential if you want to retain your profitability. Let's run the numbers. Looking at the news headlines today, we can see the Dow Jones, the S&P 500 and the Russell are all down. The Nasdaq is just slightly up. The US 10-year and the VIX are also up. Tariffs are currently making front page news and they're unsettling global markets. There's still a lot of uncertainty around tariffs. There's a lot of ideas floating around, such as a 20% tariff on global goods and services across the world. But this is still being debated behind closed doors. At this time, the situation is still fluid, something to be aware of. The talk of tariffs has been just ripping apart global markets, and the White House says that Trump tariffs will take effect immediately, as of 4 p.m. Eastern Standard Time on Wednesday, which is not quite immediately, but tomorrow. In other news, Trump begins mass layoffs of the FDA, CDC, and other US health agencies. Looking back in history to understand how tariffs can impact price and economic activity, in 2018, tariffs were slapped 50% on washing machines, and we saw the price go up and then the price come down. Of course, this was around the time of the pandemic. It's basic economics. When the price goes up, the quantity demanded comes down, and also supply and demand tend to meet each other at different levels of production. When we look into the 2018 effect on laundry equipment, we saw that was a pretty steep drop-off, so we could anticipate something like this, but over time things tend to normalize. Tire tariffs were first introduced in 2009 during the Obama administration, and they were 35%. This was to counter the cheap imports of tires from China. And what we saw during this period of time was that tire prices came down, surged, and then dropped. Don't forget about what happened around 2008. It was the global financial crisis. And that's why we saw overall CPI just plummeting. Given a couple of years, the tariff on tires didn't make any damn difference at all. The key to understand, when a tariff gets whacked onto something, it largely depends on the economic conditions that are occurring. Here we're seeing a 25% tariff on Chinese TVs. The issue to note is that it's really about what the global economy is doing. If the global economy has slipped into recession, of course prices will decrease. And we saw in C19, people were trapped in their homes. And of course, what happens? People need to get a TV, or at least change it. That's what they're looking at. They're not going out to dinner and other things, so they're substituting and upgrading their televisions. But over time, what we see is that tariffs largely become ineffective. And an interesting statistic for you, over 70% of smartphones are imported from China. And it's likely smartphones will be the target of tariffs in the upcoming tariff wars. Prepare for your mobile or cellular telephone to get more expensive. And cell phones have actually been decreasing in price up to 2023, and then they started to rise again, only to start decreasing. But overall price-wise, they are coming down. Well, except for the model that you want, it just seems to be going up. Now, if we put it all together, things are not only getting more expensive, but there's less people inside the workforce as government expenditure is getting slashed. We'll get in shortly to how the crypto market reacted, but Binance's ended Tether USD trading in Europe to comply with the MiCA rules. Bitcoin has actually shown a degree of strength. I thought you might like this tariff timelines. On January 20, President Trump was sworn in. February 1st, Trump signs the tariff orders, 10% on China, 25% on Mexico and Canada, to start February the 4th. On February the 3rd, those tariffs were paused, but not for China. 10% tariffs went into effect. And then on February 10th, Trump planned to raise the 2018 metal tariffs to 25%. 3 days later, reciprocal tariff plans to just match other countries' tariffs. On March the 4th, those tariffs went live on Mexico, Canada, and China. March the 5th, there was a 1-month delay on Canada-Mexico tariffs for the US automakers. 1 day later, the tariffs were delayed. On March the 10th, China hit back with a 15% tariff on US farm goods. 2 days after that, metal tariffs of 25% on all steel and aluminium products caused global markets to shake. On March the 13th, Trump threatened a 200% tariff on EU wine, champagne and spirits. All the uncertainty up and down inside the tariffs policy basically shook world markets, and of course Bitcoin felt it. Another really interesting statistic, 60% of Solana's economy is highly exposed to meme coin activity. Now, what does that mean for you? If you're inside Solana and you want Solana to go up, you want to see the memes coming up. How did the markets respond in the past 24 hours? We saw that yesterday there was upward price momentum inside the fear gauge, the VIX of the stock market. This brought down prices, brought down junk bonds, brought down the major market indices. And in the past 24 hours, we saw a bit of a decrease in the VIX just at the start, a spike up, and then a spike back down. But don't forget, tariffs are just around the corner. Have we broken into a downtrend? No siree, not yet. And please note, you cannot mark up your charts if you're doing so with the CTKS method until the clock ticks over UTC -4. And if you're marking up your charts correctly with the CTKS method, you redraw all of the lines, not just the ones that change. Okay, so looking at the DXY, we can see that the price momentum was quite negative last month and also has been negative this month. And you might also notice that the DXY hasn't ticked over to the next month just yet. Dollar yen was negative last month and has managed to basically consolidate slightly negative this month. The tariff talk last month saw the US 10-year yield finish wildly negative, and this month around just the neutral stance. Although we can see the US 2-year yield was negative in last month and has gone relatively negative this month. Also note that it hasn't crossed over. Do not be marking up your charts yet. US oil was negative in last month and found structural support and rebounded. It's slightly positive neutral. Moving across to row 2, we saw that junk bonds was just a little bit positive last month and unfortunately finished on the negative price path for this month. Remember that these price paths are all about understanding the structure of the chart that you're looking at and also seeking to estimate the end of month price under normalized market conditions. One thing that we saw that was absolutely not normal was the euro dollar. You can see the euro dollar is starting to come back to that positive normalized price path. One of the things that people often mess up, well, they don't actually mark up the chart at the correct time. There's a lot of people marking up charts right now that shouldn't be. This is why inside the service I always mark up the charts correctly. One of the things you'll note with this particular price path that was drawn at the start of the month, the euro had already taken off and was going gangbusters. But I ignored that because the structure of the market is what's important, and prices always tend to normalize back to either the positive or negative price paths. So even if it goes wildly positive, that doesn't mean it's going to keep on going. Price is always moving in a wave. And what we saw was a swap of the euro with the DXY in terms of risk on. This is basically looking kind of like the VIX. When looking at the Aussie dollar, it was following the normalized positive price path and then lost it. This is about a gaining or losing of structure. The Aussie dollar lost structure and was going negative. It's currently mildly positive. CTKS method paths are taught in Level 2 Standard Certification. Now, what are they for and why do we draw them? If we don't draw them, what typically happens is we'll just say, for example, gold at the start of the month or start of last month. We might say, that's going to go negative. And then you hold on to that concept. But actually, price is going positive. And if you thought that something was going positive and it actually goes negative, you would be unprepared. So this is built in to Level 2 Standard Certification, the concept that you always prepare yourself for an up scenario, a neutral scenario, and a down scenario, but you do so according to structure. And we've seen gold go absolutely gangbusters because of the economic turmoil and uncertainty of this on-again, off-again tariff. Sometimes the tariffs are on, sometimes they're off, and sometimes we don't know what the hell is coming. Having an idea as to where price could go and where the structure is vitally important. If you're very bearish on something but it goes positive, at least you'll be seeing it. And we can see that silver closed out pretty much on the normalized positive price path for this month. Also note that next month's prices haven't even started yet, so if you've marked up your charts, unfortunately you need to wait and do it again. When looking across normalized positive price paths and normalized negative price paths, if we find that the price is diverging from that normalized price path, it typically comes back and normalizes. It may not do so by the end of the month, but it's something that you should be aware of. We've seen copper in the past month just rally up substantially, and it's currently above the normalized positive price path. But we've seen this many times before. Just be aware of how things normalize. Price normalization is a really important concept. I talk about it literally all the time. The other thing to note, a particular chart can be going along one particular price path, and then a shock happens inside the economy, which can move it between price paths. You have to be aware that it just doesn't only follow one path, it follows structure. And if the structure is too strong, coupled with a panic event such as tariffs, you will see this kind of behavior. What we saw inside the NASDAQ was following the normalized negative price path, tried to normalize out of that price path, but actually closed pretty much on it. And please note, you must wait until price goes across the boundary of the next month before you draw up and apply the CTKS methods to your charts. If you're part of the service, you don't have to worry about anything because I give you the indicator that has all the paths for the current month inside it. Looking at the Dow Jones Industrial Average, it was pretty much negative in the last month and went negative in this month. Notice that big surge in the VIX. This created non-normalized price action. So the Dow just diverted from its negative price path and then was whacked right straight back into it. Now, it does take some time, but this is a thing that you need to be aware of. Now, why wasn't structure drawn more at a lower price point? Because there was heavy structure here and not so much down there. Under normalized price conditions, heavy structure will take time to get through. If it passes through like this, it means there's a lot of negative price momentum and the VIX is obviously spiking. Junk bonds are obviously decaying and the major markets are coming down as well as crypto. Reading across and through charts is a very powerful skill to have. It does take some time, but when you can interpret the cheat sheet throughout row 1, row 2, especially how row 1 and row 2 impact row 3, row 4 will just substantiate what's going on in row 3. Therefore, row 3 is very important, and row 3 will directly impact Bitcoin and total crypto market cap. In fact, Bitcoin and total sniff out potential problems in row 3 as well as row 1 and row 2, and also potential strength as well. In this month's video inside the service, I'll go through all 32 price paths from last month and give you the projections for this month coming. Marking up the correct chart at the correct time is wildly important. For March, the last month, we saw that Bitcoin originally started really positive, and when this particular indicator was released, Bitcoin was already up here, and these paths were drawn in. One thing to note, I never follow price, and you shouldn't either. You should follow structure, because if the structure is hit and it can't hold, it's coming back down. Structure is wildly important. These are not just random lines drawn on a screen, as a lot of people think that they might be. For example, looking back into February, when February, Bitcoin was trading around that north of $100,000, anticipating that it could come down to about 86,000 was pretty much off the board. Everybody thought, yeah, the parabolic face melting rally is here. But if you followed the price path, you were aware right from the start that it was going negative, and boy oh boy did it go negative. Why? Because the VIX spiked up, all this tariff problem right across the globe. And then at the start of the month, if you draw your price paths to reflect actual price, you're actually doing it incorrectly. You must reflect structure. Structure is the key to reflect. Even a neutral price path is meaningful. It's not just a random wobbly line, at least not for me. The other thing to note, Bitcoin has not crossed over its month boundary at the current time. When marking up charts, please set your time zone to UTC -4. If it's not crossed over UTC -4, you don't mark it up. There was a tremendous amount of weakness inside the crypto market from February. In fact, nearly $1 trillion was wiped off total crypto market cap back then. For March, we've basically hovered around the neutral path. We went positive, we went negative, and then we normalized back to neutral. But you can see a degree of weakness is starting to creep in. If you would like to get the analysis, just come across to ctksmethod.org. Just click on Service. Just scroll down the page that loads and you will see row 1 through to row 7. I do the price paths, positive, negative, and neutral across these 32 price charts. Now, the difference in variability between the DXY and the Dow and the Russell and gold and the US 2-year, it's wildly variable, but we tend to do a fairly good job at predicting the boundaries from which price will go up and down inside a specific month. I'll make sure that I give you some tips and tricks inside this month's video for the service across these 32 charts. Always be aware that if a particular chart is following a normalized positive price path, the structural indicator will give you an idea if it's getting above structure or getting rejected by it. Remember, smart money is always selling and always buying at structural levels, and price is simply moving in waves between these buy levels and sell levels. Buy and sell, buy and sell. The key is to not lock yourself into one particular path, like the "it can only go up" scenario. If it's going up, it's probably doing something like this, so please be aware. And that is the case, especially inside the crypto market. And exactly for this reason, we must be aware of what the row 1, row 2, row 3, row 4 are doing. If we don't have this competitive intelligence on our radar, we're just going to get whacked, because what happens inside row 5 to row 7 is very dependent on what happens to row 3. Row 3 is very dependent on what happens to Row 1 and Row 2. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.